Right, so let's bring in Wale Olusi now to weigh in on the conversation. Of course, one of the top stories today is the meeting between the Central Bank of Nigeria and the Bureau de Change operators, trying to see how to reduce the widening gap between the interbank foreign exchange markets and, of course, other segments of the market as well. Wale Olusi is an investment research analyst with AfriInvest. Wale, good morning.
Morning, Harriet.
It's great to have you join me on the program. So let's take a look. Today is, it's a very interesting day because Forex is one of the trading Forex derivatives is one of the many issues that has continued to dominate conversation for you analysts and talking to your clients as well. Let's take a look. Give us your perspectives on how the 7 months flexible Naira-dollar trade has been like that since the reintroduction of the interbank foreign exchange market.
Okay, thank you, Harriet, for your question. I think before the 7 months, we already have about 12 months of what we call a rigid exchange rate regime in the Nigeria currency market, where the official rate was pegged at about 200 naira to a dollar. And what we saw following that was, a parallel market rate that was, just running away technically. I mean, the spread between both segments was, widening. But in June, following an MPC meeting, we saw the CBN, surprise the entire market by, taking a decisive decision to float the exchange rate. I mean, the market greeted that with a lot of excitement. But 3 months down the line, what we observed was that the market was not rather floating. Prices were more or less, very, very rigid. And that has continued up till date. And at the moment, nobody can really tell what rate the Naira is selling. Rates in the market are going at different rates. I think there are about 7 different rates on the street at the moment. There's an official rate, there's a BDC rate, there's what the Aboki men are selling, there's a traveler's rate, and I mean you can keep counting. So I think there's a full-fledged currency crisis in the market at the moment, and what we hope the BDC operators and the CBN can achieve out of today's meeting is how they can look for how to move forward from there. Because for us at our end here, we are looking at our outlook for 2017, and one topical issue that keeps popping up remain the crisis in the currency market, which remain a recurring decimal and a decisive feature that will determine what everything will be in 2017, as it has been in about 24 months now.
Now, ahead of today's meeting, the president of the Association of the Bureau de Change Operators, Aminu Gwadabe, says there are plans by licensed FX retailers to launch an online platform. Do you think that this will have any impact on the rates? Because right now we have at the interbank foreign exchange market, the Naira is at 305 to a dollar. For the Bureau de Change is at 400 Naira to a dollar. So we have almost 100 Naira gap. So do you think that gap will reduce if they go ahead and launch an online platform for thousands of its members?
Well, for us, I think launching an online platform, we can't correctly say how that will, work out. But what we know for sure is that what we close the gap between the and market, about 7 of them, is one, liquidity in the system. We know that there's a need for dollar supply in the system. And the second very important issue is allocative mechanism for this dollar. We think the Apex Bank still need to, come, clean with the market in terms of how we really want to efficiently allocate the scarce dollar in the system. That way, if that process is, made and it is transparent to all market participants, then you can start seeing, all the interest group in the market looking at the outlook for the Naira. And if it looks like a system that will work, then we can start talking about closing the gap between the official rate and the non-official rate, including the BDC rate.